Hello, I'm Brooks Crankshaw. Today I'm talking about ownership transition and finance in a lesser-known subsector of the business services world. Private aviation presents a new and interesting opportunity for buyers and sellers to participate in what could be a larger consolidation of this growing industry. In the new world of social distancing, private aviation has become a popular alternative to commercial flying. Demand for commercial travel is still 70% lower than just a year ago, and major airlines are struggling financially. Under the CARES Act passed by Congress in March, commercial airlines were provided a $25 billion aid package and prohibited from furloughing or laying off workers until October 1st. When the restrictions expired and Congress was unable to pass another COVID relief package, United Airlines and American Airlines furloughed over 32,000 workers. Southwest is asking labor unions now to accept pay cuts for the first time ever. Private aviation, on the other hand, has rebounded to 85% of its 2019 levels. Now, the onset of COVID-19 shattered the industry, halting travel across the globe. According to Argus International, U.S. flight activity saw worse traffic numbers in the months of March, April, and May than in the bottom of the Great Recession in February of 2009. However, business aviation flight activity continues to record a substantial recovery. As shown in this graph by FlightAware, business aviation traffic surpassed 2019 numbers for the first time since the initial decline on June 20th, and that's represented by the gold line. Compared to before the pandemic, this rebound in global private flights has outperformed commercial and cargo flights, which are represented by the blue line. On the highly traveled Friday of Labor Day weekend, the number of global private flights were 36% greater than the global commercial and cargo flights. While a larger portion of revenue for private aviation is typically driven by business travelers, with many businesses maintaining a limit on non-essential travel now, the rebound has been fueled by leisure flyers. According to McKinsey, before COVID, only 10% of people who could afford to fly privately were doing so. Now, charter operators estimate that as much as 50% of sales are going to first-time flyers. These flyers are taking advantage of a separate small airline terminal, smaller aircraft, and time efficiency. JetNet conducted a market sentiment survey of nearly 500 business aircraft owners and operators. As shown in these two charts, the low point was measured in the second quarter of 2020, but responses have begun to sharply rebound in the third quarter now due to customers beginning to feel more confident about business conditions. Both current industry participants and financial buyers face an investment opportunity in private aviation. The industry is highly fragmented with a strong divide between major players and small mom-and-pop shops. According to the National Business Aviation Association, 59% of business aircraft is operated by small companies with fewer than 500 employees, and 70% with less than 1,000 employees. Additionally, the top 25 charter operators flew almost 550,000 hours in 2019, only about 35% of the private jet charter market in the U.S. By contrast, the four largest domestic airlines, American, Delta, Southwest, and United, control over 66% of U.S. commercial flying. This chart details some of the important transactions completed in 2020 so far. The year started off with two substantial transactions in January. JetEdge International acquired Jet Select Aviation, and Delta Private Jets merged with Wheels Up. Shortly thereafter, Wheels Up acquired Gamma Aviation Signature, forming the second largest private aviation company in North America. In July, despite not having fully recovered from the pandemic, JetLynx acquired its competitor, Meridian Air Charter. Meanwhile, other companies are expanding their fleets with more planes and more pilots. Now, aside from much needed comeback, what does this activity offer industry participants, including owners, operators, and charter companies? It offers the opportunity to sell their company, merge with another company, or raise capital from a private fund. All of these strategies take advantage of favorable market conditions. Now, industry players can benefit from these strategies in multiple ways. Smaller or mid-sized players can get a leg up on the competitive landscape with technological advances that they could not otherwise afford. Operators can overcome the barriers to growth, for example, finding qualified pilots or securing aircraft. Owners can diversify by expanding a portfolio of offerings to include jet card, maintenance repair, or brokerage. The benefits of a buy and build strategy can lead to economies of scale, diversification, and vertical or horizontal integration. Financial buyers, including private equity funds or family offices, should consider investing in this market. With ongoing consolidation, the market presents opportunities to deploy capital in a buy and build strategy, which takes advantage of the opportunities offered to existing aviation companies. Welcome aboard, owners. Consolidation has the potential for a smooth landing on a longer runway in an active industry. Thanks for watching today, and have a good day.